So, usually on this channel, I give you guys updates on my investing journey. We review and take a deep dive into various financial products and news. But today we're taking a step back, and I want to put information out there on how to get started with a brand new investing portfolio. I know it can seem very intimidating, especially when you come across a $44,000 portfolio. So, to help with this, I'm going to show you guys my basic outline of how to get started in the right way. We're also going to evaluate common mistakes that new investors tend to make. And then finally, I'm going to take a look at the current state of the stock market and see whether or not now is a good time to start investing. If you guys enjoyed the video, we always appreciate a like, subscribe for more content, and let's do this. Okay, so step one in how to start investing, of course, is going to be research. Do a ton of research. And luckily, if you're on YouTube watching finance videos, you're probably already in the middle of doing this step. And in my opinion, YouTube is a phenomenal place to learn new things. But on top of that, it's a good idea to read actual finance books. The Intelligent Investor is a classic. If you're brand new to finance, Rich Dad Poor Dad is a great basic book. Peter Lynch is a famous investor. His book is One Up Wall Street, and another one of my favorites is The Millionaire Next Door. So step one is research and understanding exactly what you want to accomplish by doing this. So from this point on, you can either go down the trading route or become a long-term buy and hold investor. I'm not going to talk about trading because I don't do that. I'm a long-term buy and hold investor. And in this category, there's tons of different approaches and strategies like active versus passive, growth versus value investing. And in step one, you should have identified what kind of investing you want to pursue. But no matter the strategy, so value versus growth investing, there's always going to be two major paths: individual stocks or ETFs. And I would say neither one of these is inherently better. Individual stock picking is going to be more complicated, but if you're really into investing, that could be a fun activity for you. So if you want to buy individual stocks, there's a couple of strategies you can pursue here. One is you can look at people like Warren Buffett, successful investors, and see what they invest in. I wouldn't just copy their portfolios, but it can act as a fantastic starting point to then do further research. The same thing goes for other popular and successful ETFs within your niche. You can see what kind of companies make up these funds and then do more research on them. And the final way is just to do more independent research. And when it comes to ETFs, this is a lot more simple. You can just find an ETF with a good performance that is within the category you're trying to invest in. And just like that, you can begin the lifelong process of being a long-term investor. You do not have to overcomplicate things. In fact, it's usually a huge mistake. It can be as simple as starting with VTI, which is a total US stock market ETF, and $10 deposits. And here's an infographic on common mistakes that new investors make, and we can just touch on a few key ones here. One of these mistakes is not reading investing books, and that goes back to step number one. You have to do the proper research. Only buying technology stocks, aka not being diversified, is another huge mistake. Also, as an investor, you're going to develop a strong stomach over time and learn to hold your investments during volatile periods, because that is inevitably going to happen. And also timing the market. So many new investors hold off starting a portfolio because they're afraid that we're about to enter a recession and it's a bad time. And that brings me to the next part of this video, which is the current state of the stock market and whether or not now is a good time to get started. So I just came across this post on Twitter asking, where are we now? And this diagram is showing some generic phases that the stock market tends to go through. We have points like takeoff, the first sell-off, which is a bear trap, media tension, delusion, greed, a bull trap, fear, capitulation, despair, and return to mean. So we have some people saying return to normal. We have more people saying return to normal. In fact, we have a lot of people saying return to normal and a few bull traps. Now, of course, nobody knows what's going to happen in the future. Just this morning, I came across an older Joseph Carlson video where he was responding to a comment somebody left on his video. It's somebody that wants to get into investing, but they're worried about a looming recession. And this was 3 years ago in 2019. So if you invested during this time period, even with things like COVID and the awful year we had in 2022, he would still be up on his money. And that's why timing the market is a huge mistake new investors try to make. Time in the market always beats timing the market. And actually right here, I have a great visual on this. So the longer you are invested, the higher the likelihood of actually generating a return on your capital. That's the main difference between investing and gambling in the first place. So that's my basic guide on beginning the process of investing. You want to begin with a ton of research, consume as much information as you can, and develop some kind of a plan and an end destination. Once you have that in place, it is very important to actually begin the process of investing. Open up a brokerage account and make that first deposit. Try and avoid some common mistakes new investors make, and remember that time in the market beats trying to time the market. And before you know it, you can be like me with a $44,000 portfolio and in the red by almost 10%. So that's gonna do it for the video. If you guys enjoyed, leave a like, subscribe, and I'll see you guys in the next one.